Welcome to my presentation on costings for AVCO, Lifo and Fifo, which is first covered at AAT Level 2. Just before we get started, a quick introduction to myself. I'm AAT qualified, studied Level 2, 3 and 4. I'm currently working in finance and have been now for 2 years, but my ultimate ambition is to train to teach AAT in the future. The presentations that I do are just about the key concepts of AAT, and they're designed to support the fundamentals that will help you progress through levels 2, 3 and 4. I'm not endorsed by AAT and these materials are my own. I hope these help and prove to be beneficial, and good luck, and most of all enjoy the journey that is AAT. Okay, so what are AVCO, Lifo and Fifo? So they are essentially methods of valuing inventory and cost of goods sold. And it's average cost, last in, first out, and first in, first out. Okay, so you've got AVCO, Lifo, and Fifo. Now, to try and get your head around this, I actually learnt this in a visual way by using a graph, which sounds a little bit strange, but let me just explain how I got my head around how these actually work in terms of a visual representation. So I'm just going to bring a graph up at the bottom here. Now, if you can imagine here that coming up the side here, you've got your receipts, okay? So by that, I mean when you've ordered something and your goods have come in. And at the bottom here is the date that you ordered them, okay? So going throughout the year and how many you ordered and that came in. So then what I would do is I would have a look and think, okay, so which one of these three inventory valuing methods and cost of goods sold methods am I using? So let's have a look first at Fifo. Okay, so for Fifo, first in, first out. Okay, so this means when we have been issuing items to the production department, to the manufacturing department, for these items for what you're making, what they would use is they would use the first lot that they ordered. So the way I represented this in my mind was I said for every issue I'm going to be taking, so if we're a construction company and we've ordered lots of bricks, okay, so these lines represent the bricks that we've ordered, okay. So we're about to go and start building another house, so we need to take some bricks from our stock. So we take them for the purposes of calculating the cost of goods sold. We are going to take them from the first pile that we ordered in. Okay, so I would say that we're going to start taking them from here. Okay. Once all that pile's gone, we'd go to the next pile and we'd start taking them from here. And then we'd start taking them from here and so on. So what's important here to know is that generally, you know, we can assume that year on year, over the course of a number of years, prices for things are going to increase. Okay, so we might have paid, say, I don't know, 50p a brick when we ordered these, and then we might have paid 75p a brick when we ordered these, and then say £1 a brick when we ordered these in. So when we're calculating our cost of goods sold, we are then using these prices to put into our formula. So they were the first ones that came in and we're using those ones first. It also means, I'll just get a different colour pen. It also means that if say let's keep the prices going up here, let's say. getting quite expensive. When we're then valuing the cost, valuing our inventory, our closing inventory, we're only going to be using the value of the latest goods, because all of our old stock, all of the stock that we had already used up, that's all gone now. So we're only going to be using these latest orders to value our inventory. So that means that when we value our inventory, we're going to be doing so at the latest prices. Okay, so this will then be our closing inventory. Okay, so these are our latest prices because they're the ones that we've ordered at the latest point. And when we were doing our cost of goods sold, then we would have done it on the oldest prices. So let's compare that then to Lifo. So with Lifo, we need to be thinking about it in terms of when, so imagine these are our bricks again. So let's put the prices in here. Let's get all those written in. So we're using the same bricks, but if we were doing it on a Lifo basis, then what we would do is we would actually say that our cost of goods sold, we're going to be using the last ones that we purchased. So we're actually going to be using these lot first, then we'd move on to this pile, then we'd move on to this pile. So this would actually be our cost of goods sold valuation. And straight away you can see that actually the Lifo is going to give us a higher cost of goods sold because we're basing it on the latest prices. So because we generally assume prices are going to increase over the years, that our cost of goods sold is actually going to be more expensive. Then that then means that our closing inventory is then going to be valued on the lower prices, because we're then going to value our inventory on the oldest prices because we haven't yet got round to using them. So why does this actually matter? Well, if we look at our gross profit, when we're working out what our gross profit is, it's our revenue minus our cost of goods sold. So if we had, say we've got, let's pop it up here, say our revenue was £5,000. Under Lifo, we might have a cost of sales of £1,000, and under FIFO we would have a cost of sales of £500. So instantly you can see that under Lifo it would be 5,000 minus 1,000, which would give us a gross profit of 4,000. And under Lifo, it would be 5,000 minus 500, which would be 4,500 gross profit. And this matters because it affects the amount of tax that a company will end up paying. So the lower your profits, the lower your tax. So under LIFO, you would end up paying lower tax, which is why it's not as standard accepted in producing UK accounts, and that all accounts should be based on AVCO or FIFO. So you can see that because with LIFO our cost of sales is actually based on our newest receipts of goods, that our cost of sales is going to be higher and will therefore reduce our profit. Under FIFO, our cost of sales is our oldest goods, so our oldest prices, and therefore our cost of sales will be lower and increases our gross profit. So what about the final one then? Well, the final one for me, I imagined it as a sort of like a big bucket, if you like. And what I used to do is I used to think to myself, okay, so at any given point in time, if we were doing an issue, I would say, what is the average of all of these? Okay. So it would be with the total number of bricks that we had in store. It would be the total cost of those bricks over the time. And when you calculate the average of that, that is what you would use for your cost of sales and what you would use for your valuation of closing inventory. So this is the AVCO. So you can sort of imagine it that you're going to be taking sort of an average across the whole board, and that's what you use. So I hope giving you some sort of visual representation will help you understand it. And it's all about thinking about what stock is it that you're using first. And therefore, if you're using the oldest stock, your cost of sales is going to be based on older prices. And if you're using newer stock, it's going to be based on newer prices, which are likely to be higher, assuming inflation. And therefore, if you're using your oldest stock first, you're going to value your closing inventory on the latest prices. And if you're using your newest stock first, you're going to be valuing your inventory on the oldest prices. On the next couple of slides, we'll go through and just do a couple of basic examples on this as well. Okay, so let's take a look at an example then for AVCO. So I've just written a question here, just a basic question. And we are working in a bakery that purchases flour regularly to bake cakes for special occasions. The table below shows the movement in the stocks of flour. Using AVCO, identify the value of the issue and inventory in November 17. Okay, so here we can see that we are given a balance as at January here. So we have 1,000 kilos of flour in our inventory, and that is has a value of £500. So straight away we can see that we have a 50p per kilo price tag. So in February then, the company was getting ready for an order, so they wanted to buy in some more flour. So they purchased 200 kilograms, and each kilogram cost them 55p. So the first thing we have to do is, we know that we're increasing our quantity by 200. So it's going to be 1,000 plus 200. So our quantity is increased to 1,200. And then we know that we've purchased that 200 kilos at 55p. So if I do my workings down here for you, so in Feb, it'll be 200 kilos times 55p, which is £110. So that value then gets added on to our opening value of £500, which gives us a total value then of £610. In June we purchased a bit more, so again we purchased another 200, so our quantity now goes up to 1,400. We also paid 55p for the flour per kilo, so our value is still going to be this in June as well, but this time we need to add it on to our total of 610. So our new total then becomes £720. So at this time, our 1,400 has cost £720. So in November, we then issued out, to make this special cake, 800 kilos of flour. So using AVCO then, the first thing we need to do is understand what price per kilo are we going to do this issue at. So the first thing we're going to do is we're going to work out what our price per kilo is on average of our whole stock. Okay, so we always do it what our total value is divided by our total quantity. So it's always the total value divided by total quantity, okay, and that is your AVCO formula. So for us here then, we're going to be doing our value of 720 divided by our quantity of 1,400, and that gives us, rounded to 2 decimal places, is 51p. So our issue is going to be the average. So our average per kilo is 51p. So our issue then is going to be 800 kilos times our 51p from our calculation that we've just done. And that gives us a value of 408. So our price per kilo is 0.51. We're now issuing it out, so we're now lowering our stock levels. So it's 1,400 minus the 800 that we've taken out. So we're down to 600 kilos left. And then we need to do our 720 minus our 408 value from here. And that gives us a value of 312. So ongoing, if they were then purchasing more, you would continue with the receipts coming in here, your further issues coming in here, but at the point of issue, so at this point here, you will always do whatever your total value is divided by your total quantity. Okay, so that's taking an overall view. We're not concerned about, you know, which part of the stock that we're taking as such. We're just doing it on the average value to find our value for that issue. So we're going to make a note here, because coming on to a slide later, I'll show you how this affects the cost of sales. I'm going to make a note here that for the purposes of the cost of sales of this 800 kilos that was used, our cost of sales value would be £408. So next we'll go on to doing an example of FIFO. Okay, so we're going to use the same example then for our FIFO calculations. And the first thing we're going to start with is doing our taking into account our receipts. So we already know what our values are going to be, because that isn't going to change. So this process of adding in your receipts stays the same regardless of whether you're using your AVCO, FIFO or Lifo valuation method. It's only at the point of issue when we then need to have a look at which price per kilo that we're going to be looking at. Okay, so we purchased another 200 in February, and we know that our workings from our previous slide is 200 times our 55p per kilo is a value of 110, so we add that on. And again we buy another 200. It's at the same price, these two are the same price, so we know it's going to be 110 again. So we come back to our 720. So at this point then we need to have a look that we're about to do an issue of 800 kilos of flour. So we are going to be using our first in, first out method, FIFO method. So the first lot we had is, don't get confused by this, because we have to have a look at what our stocks were before we purchased anything. If it's given in the question, then you need to make sure you're using that. So what you then need to do is you need to have a look and say, okay, well we were given, or we started with 1,000 kilos of flour, and that was £500. So on that basis, we can do the very short calculation and say that that is 50p per kilo. So we can see that we only need 800. So can we take, the question you need to ask yourself when you're working through when where you're taking your issues from is, we need 800. Can we take 800 from that first pot? Well, yes, we can. So we're going to issue it as 800 times 50p, which gives us 400. So our price per kilo is just going to be this 50p here, because it's coming from that original stock. Okay? We've reduced our quantity by 800, so we've only got 600 kilos left. And we have taken out our £400 that our issue has cost. So we are then left with 320. So this is quite a simple example. So you're always looking, the key things here are to always look at how much your issue is, and can it be taken from just one pot. So in this example it can, because we had 1,000 kilos here. we know our 1,000 kilos is was at 50p per kilo because it was 500 pounds. We've done our receipts, we've added it in so we know how many kilos we've got, we know what our value is. So when we calculate that we've got 400 pounds, our issue is worth 400 pounds, we're left with our 600 kilograms of flour and then a new total of 320. So for the purposes then of our cost of sales comparison later, our cost of sales using FIFO is £400. So that's how you use your FIFO, and then on the next slide we will go and do the same example but using LIFO. Okay, so using the same example then on the LIFO method, let's bring it up. First of all, let's just start with putting our values in here. So we started off with 1,000 kilos. We purchased 200 in February, so we then had 1,200 kilos. We know that our 200 kilos was purchased at 55p. Which is 110. We then purchased another 200 kilos in June, so we go back up to our 1,400, and we know that that was at the same price, so it's another 110, so we come back to our £720. So where this then changes with LIFO is how much is the issue valued at. So I'm going to draw myself a little box down here to give us a bit more space so we can work it out. So the first thing that we're going to do is have a look at where we can get this 800 kilos of flour from. So can we take this 800 kilos from the previous order? Because remember, we are working on the last in, first out basis. So we're always going to be using the stocks that we purchased, the stocks that we received most recently. So to find this 800, can we take it from the June? So we can't take all of it because we only purchased 200 in June, but we can say, well, we're going to empty that pot. So we're going to empty the pot of 200. We purchased it at 55p a kilo. So that 200 is worth £110. So we found the 200, so now we're only looking for 600. Can we take the 600 from the previous receipt? Well, we can't take all of it, but we can empty that pot out. And again, it was at the same price at 55p, which is another 110. Okay, so those two pots are now empty, which means we're now down to finding 400 kilos. So we're then going to take our 400 kilos from our original 1,000, and if you remember from the previous slide, we worked that out at 50p a kilo. Which gives us £200. So now we just need to check, have we got everything? So we've got 200, another 200 is 4, and another 400 is 8. So there's our 800 kilos. So we know that we've done that. This is now worth, this has been valued, this issue has now been valued at £420 because it's all of those added together, because that makes up our 800 kilos. So finishing off the table then, because we've used up 800, we go back to our remaining 600 kilos. And then that, when you then take off the 420 from the 720, you're left with 300. So I just want to have a quick look here at the graph that we looked at earlier. So if you remember, I showed you that we had a way of looking at it was receipts up here and the date down here. So in LIFO, what we're doing is we're saying we're going to take the most recent first. So we're going to start on the right hand side of our graph and we're going to empty this pot with our 200. So that was our June pot there. We're going to empty our February pot there. And then we're going to take just a little bit from what we had to start with originally. So you're always working back your most recent pot first. Then for the purposes of a later slide, I'm just going to show you what the cost of sales is for this. So the cost of sales is going to be our £420. Okay, so now I'm just going to talk you through briefly on just checking how your LIFO and FIFO value for your closing inventory actually works. So to do this, we've already looked at how we've done our issues on the last two slides, what the value of our issues were. So we know that we had an issue of 800 kilos in November 17. So in the next few tables I'm about to bring up, it just summarises what we did on the last couple of slides. And then using that, we're going to prove that our LIFO and FIFO calculations do actually give us the correct closing inventory value. So this table here, this table is going to show us what our total column was from the previous slides. Okay, so this is actually our total. Okay, so we ended up with a total of £320 and £300 with our respective FIFO and LIFO. So the way we're going to do this is we're going to prove that these figures are actually correct. So to do that, we'll bring up our receipts that we got. So these were our orders in. This is what we purchased. And then I'm going to bring up two tables. So what we're going to say is at the end of our issue, how do we check our calculation was correct? So first of all, we're going to have a look at LIFO. So in LIFO, our last in, first out, we used our most recent stock first to find our 800. So we know that we had the 200 delivered to us in June. We had the 200 in February, and we had the opening amount of 1,000. And these are our relevant price per kilos. So in LIFO then, to find our 800, we had to use, so going backwards because it was last in, first out. So first of all, we used all of our 200 in June. We used all of the 200 that came in February. And then we got the remaining balance, so the 400, we then got from our original 1,000. So because we don't have any stocks left of our June amount, we've got nothing left in June because we emptied that pot. We've got nothing left in February because we emptied that pot. But we do have something left from our opening stocks. So we do have our 1,000 minus the 400 we used So we do still have 600 kilos left. And we have our 600 kilos, and we need to multiply that by the amount it was per kilo. And that way you get your £300. So we can see then that our £300 matches what we ended up with in our original calculation. So to do that then with the FIFO balances, so what did we do with FIFO? Well, FIFO was first in, first out. So we actually took all of the 800 from this pot, because this was the first amount that was there. So we took all of our 800 from there. So we were then left with 200 kilos from our January pot, and that was at 50p, which equals our £100. We were also left, because we haven't touched the pots from February and June, we were also left with 200 in February and the 200 kilos in June, and both of those were at 55p. So they are at a value of 110. And when we add all of that together, we get back to our 600 quantity and our that should be 110, my apologies, and our 320, which goes all the way back to proving that we've done the correct calculation. And next we will go and have a look at the cost of sales difference. So finally then, how does the method you choose affect profit? So we're going to assume that we're making a revenue of £700. Okay, so from the previous slides then, here's our cost of sales. So we know that using the same example, we had a cost of sales using the AVCO method of £408. We had a cost of sales of £400 using FIFO, and we had a cost of sales of £420 using Lifo. So let's have a look at how this affects the gross profit. So I've just done a little chart here just to make it really easy to see. So we know that our revenue is 700. Our AVCO cost of sales is 408. So our gross profit then is 700 minus 408, which gives us a gross profit of £292. For FIFO, the revenue is the same, 700. Our cost of sales, though, is only £400. So our gross profit is 700 minus 400, which is £300 gross profit. And then using Lifo, again, our revenue is 700, but our cost of sales is 420, which makes our gross profit 700 minus 420, and that equals our £280 for our gross profit. So this is why you can see here now why only AVCO or FIFO can be used in UK accounts, because using the Lifo technique, Lifo method, you're actually reducing your gross profit. And the reason that you're reducing it is because you take the value of your most recent purchases first. It's always going to be a higher cost of sales, so your gross profit is always going to be lower. So hopefully that slide will show you the difference in how the method you choose actually affects the cost of sales and therefore affects the gross profit overall. Okay, so final thoughts then just for the last bit of this presentation. AVCO, Lifo and FIFO are the three methods of valuing inventory. AVCO looks at the total inventory and works out an average, so it's your total value divided by your total quantity to give you your the price that you're going to issue at, value at. FIFO values issues on the oldest prices. It's first in, first out. So it values issues on the oldest prices and inventory on the newest. But Lifo, last in, first out, values issues on the newest prices and inventory on the oldest. Lifo will always reduce your gross profit, so it cannot be used for UK financial statements. Try to remember to think about what pot you are taking your stock from. So when you're given your quantity that you need to issue, have a look at where can you take that from. And remember, you can empty the pot. So don't try and find a pot you can take the whole thing from. Just work it back or work it forwards, depending on whether you're on Lifo or FIFO, and identify how you're going to make up that 800 kilos in our example, or whichever issue amount you were given. And most of all, practice makes perfect. So keep practicing lots of example questions, keep going through it step by step, one thing at a time, and always check back and make sure that your value of your inventory actually matches what method you are using. Good luck and thank you for watching.